Welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I'm here with my father, Carl Swenlin. And we are excited to get this started. First of all, I do want to let everybody know that we are not registered investment advisors, so all trading decisions are your own. Anything that you hear in this trading room or read in our blog should not be considered a call to action. So that's what I wanted to get started right off the bat. We're going to go ahead and Carl's going to cover the market in general. I'm going to cover the sectors, and I think that's pretty much it. I know we do have an announcement that we did want to make at the beginning, and that is if you're not seeing the best video quality on YouTube or however you're getting it, a lot of times if you change your browser, you might find that you get a better quality. I know that I use Safari. Dad, I'm not sure which one you like.
I'm going to have to come back.
Oh, okay. No problem. Okay, so let's see. We've got a lot of people in the room. If you're new, if you could raise your hand, I always like to give everybody a nice little welcome before we get started. Randy, Rizwan, welcome to the trading room. Carolyn, ooh, lots of new people today. Good to have you with us. All right, let us go ahead and get this started. Dad, I'm going to hand the screen over to you.
Okie doke. Just, we've had a medical emergency in the family, and that may require me to drop off.
Yes.
So, apologies in advance.
Yeah, and my voice isn't the greatest because I managed to catch some respiratory something, so I'm not very helpful anymore at the house. Okay,
now we're hearing a lot about the bear market being over, and all the bulls are piling back in. And just wanted to show this chart. We showed it maybe a month or so ago, the 1929, 1932 bear market, and to show that how we had actually cyclical bear markets. We had 6 cyclical bear markets and 5 cyclical bull markets before the secular bear finally ended. And beware of that. Just I don't see anything that has changed that would make it advisable to come back in with both feet and be a long-term investor at this point. So take care.
Yep, bear market rules still apply.
Exactly. All right, looking at what we've got right now, let's see, we updating? Yes, it's updating. We've got a triple top now. This actually hasn't topped, so it's a potential triple top. And then we had the double bottom that we've been watching. And this is the confirmation line that needs to be penetrated to execute that pattern. When that happens, it's all going to break out of the declining tops line. So that's what we're looking for to happen right now. We can get another rally, something like this we had back in May. And that would be the best that I would expect. But as I showed you, anything can happen. The dollar has topped out. Gold is coming back to life, thank God. USO, crude oil, has broken out, and we may be at the end of that correction. What my thoughts are is that this was it just went too far in one direction and had to do some correction. And that's the way the market goes, up and down, but in one direction, which I think oil is going to continue up, but follow the charts. Note it. Let's see. I want to get T-bills, or T-bonds, I mean. T-bonds had come back to life, breaking out of this falling wedge, as would be expected. And now it looks like they have topped out. We had, maybe many people don't know about it, but not Microsoft. Google had a 20-for-1 split effective this morning. So if you look at the EPS, it's marvelous, but it hasn't been adjusted yet. $110 a share on shares valued at 111. Way to go. You're going to do the
sectors, yes.
Sectors, yes. Now I need to go back and do some indicator charts, looking at the main ones. Climax assessment. On Friday, we had an upside initiation climax. So we're getting follow through on that short-term. We could say it's a short-term buy signal. I'd rather not use that term though. Short-term indicators, primarily the Swenlin trading oscillators. They have ticked up as of Friday, and we'll see. But that's bullish in the short term for sure. The ITBM and ITVM, they also ticked up on Friday. These do not update until the end of the day. So these are Friday's readings, but they ticked up on Friday, and we're possibly looking at continuation of this rally. They got reasonably oversold, and so it's not out of the question to look for this rally. And in the did you mention? Yes, you did mention browser quality. Okay, and maybe we should take some questions.
Yes. Oh, Bitcoin. Did you cover Bitcoin?
Oh, Bitcoin. Yeah, that's definitely something that needs to be covered. Bitcoin is coming back to life. In the short term, it's moving to the top of this rising trend channel. Strictly speaking, we could look at this as a reverse flag, although it's getting a long in the tooth for a flag. But I still think there's that possibility working. But it's up 8% today, so it's back above the 20,000, and headed for this area here, which is will be a good thing, if a good deal if they can do that. But I don't think it's going to make it. Okay, anything else I missed?
I think that is it. Let's see. So I didn't mention, if you want a symbol request, you can put that in the Q&A box. The chat box is for you, so you can go in there and talk amongst yourselves. Just make sure that when you put in your comment that you use the drop-down menu that is above the comment, and make sure you're sending it to everyone. For whatever reason, it defaults to just send to my dad and I, and we are not paying attention to the chat box. We are only paying attention to the Q&A. So at this point, it looks like we have a lot of symbol requests. So we could get into those after the sector, but I know you had a few points maybe that came through on our comments for the trading room video. So I don't know if you had those ready to go. If not, I will go right into those sectors.
Okay, you got it.
Yep. I will take this screen and let's get it going. All right, so I'm here to tell you all about what's going on in the sectors. And my dad and I wrote on Friday that the sectors really weren't looking that bad. we were starting to see some upside movement. And of course, that has continued. Forgive the frog in my throat. I have a respiratory something, so bear with me there. So if we just look in general, this is the S&P here, and these are the 11 sectors going on here. So one of the things that we were watching are these rising trends that are starting to show up on a lot of these charts. And interestingly, when you start looking under the surface on these sectors, the aggressive sectors are really starting to look good under the surface, while we're starting to lose a little bit of momentum and participation in some of the other sectors, particularly the more defensive ones. So the market does seem to be shifting to more of a risk-on environment. If we're going to continue this rally, typically that's going to be led by those aggressive sectors. And so let's go ahead. We're going to look under the hood at the aggressive sectors, and then we'll take a look at consumer staples. So I'm going to jump right in with consumer discretionary. We're going to use our special charts for this. Members of our website do have access to all of these sector charts. If you're a subscriber and wondering where those are, feel free to send us an email, support@decisionpoint.com. And since I have your rapt attention right now, let me go ahead and show you. We did end up extending our bear market special, mainly because we forgot to mention it last Monday. So currently we're running a bear market special. You can get the first month of our bundle package for only $14. It's normally $68. So this is an excellent way to try us out for a full month. Just use coupon code BEARS, but make sure that you subscribe to the bundle, which is both the DP Alert and DP Diamonds. If during that month you want to cancel, go for it. You still get the full month. If you decide you only want one of these reports, just send the email to support@decisionpoint.com. Our customer service department, myself, will take care of that for you. All right, so let's get back to these sectors. Oh my goodness, my voice is just terrible. Excuse me. All right, consumer discretionary. So this was ended up being my sector to watch. What I do for DecisionPoint Diamonds is that on Friday, we have a special subscriber only trading room. And as part of that, I look for the sector to watch and the industry group to watch, which is what we wrote about on Friday. I gave you kind of a little bit of information from the most recent Diamonds report. So since I gave it out for free, I'm going to talk about it today. And consumer discretionary was the sector to watch, and primarily because of what was going on underneath the surface as far as participation. So we have a silver cross index, golden cross index. I think most people are familiar with what a golden cross is. That is when you get the 50-day moving average, can be EMA, simple moving average. It gets above the 200-day EMA. And that is a golden cross. So this measures how many stocks within XLY currently have a golden cross with a 50 above the 200. We also do a silver cross index. This is the 20 and the 50-day positive crossovers. So it's one step downward, more of an intermediate term look. It's terrible. I'm so sorry. So the participation under the surface was really starting to improve. And I'm gonna actually add a thumbnail just so you can see a little more clearly what is going on here. So as you can see, the silver cross index just pretty much rocketed skyward on Friday, and we're still starting to see some improvement on the golden cross index. These are still really low percentages. So I would still look at, the intermediate term as still somewhat bearish, as well as the long term, just based on the fact those percentages are so low. But what I wanted to see, which is what I did see for my sector to watch, is what we call a bull stack, where we have more stocks above their 20 than we have above their 50, than we have above the 200. And the reason we look for this, call it a bull stack, is because most of the stocks within discretionary are going to have the same setup with their EMAs. And so we know that the first thing that's going to happen if we're going to get improvement, our stocks are going to make it above their 20, then they're going to get above their 50, then the 200. And that's exactly what we're seeing with participation right now.
Yeah, that's a bear stack.
Yes. Yeah.
Cool. Yeah.
Excuse me. This is terrible. Stochastics showing rising bottoms, getting close to being above 80, which is shows internal strength. And you can see relative strength against the S&P has started to improve. So really, I liked the setup here. But, you know, close runner-ups were comm services. You can see a similar situation here, but the Silver Cross and Golden Cross not configured as well as it is on consumer discretionary, but certainly seeing positive notes on this chart with stochastics rising, and look at the participation just popping higher for stocks above their 20-day EMA. Currently, it's pretty much in a trading range, but we would expect to see it get at least to the top of that range, just based on the fact that these participation under the surface is starting to improve. And finally, XLK. Again, I'm so sorry for this. XLK, RSI has gotten positive, rising short-term trend. Kind of a, I don't think I could call it an ascending triangle. We just don't have flat enough tops here. But certainly the rising bottoms are good. Looks kind of like a symmetrical triangle, which is good / bad. They're continuation patterns, but we're getting the upside breakout, even though the prior trend was moving lower. So again, I think it's a pretty nice look here on XLK, but I think the best call was consumer discretionary, which is up almost 2.5% the last time I looked. You can see PMO accelerating higher, and notice that SCI really starting to show some improvement, but both of these numbers are lower than what we see on consumer discretionary. Certainly a nice increase in participation under the surface. All right, let's look at just a few of the defensive areas of the market. And while I'm doing this, feel free to ask your questions of Carl, just in general. I mean, it's great to have him in the room, and I know you just love answering questions, Dad.
Right.
All right. So consumer staples really stuck sideways in a trading range here, really struggling with getting above that 50-day EMA. This area isn't entirely weak. We do see the RSI is positive still, and the PMO is still rising, but it is below zero. And we see the participation is starting to sag right now with the same amount of stocks above their 20 and their 50. That pretty much tells you that things are starting to go the wrong way as far as consumer staples go. You can see also that although we have improving relative strength, we're starting to lose it in the short term here. Stochastics are still positive. So again, we're starting to see participation shrink here, but the picture isn't completely negative, which I think really gives us evidence that we should see this rally continue. Here are utilities, which have topped. They now are in a declining trend. Flat bottom here, falling tops. That is a descending triangle. That is a bearish formation. And I'll tell you what, in a bear market, almost all of the bearish formations and signals tend to resolve to the downside as expected. You could see participation, while we did get some improvement here on Friday, overall is not quite what we're seeing on the others. The Silver Cross has just been in total decline here, and we are seeing that Golden Cross starting to fade as well. One other I'm going to look at, and that is healthcare. And with healthcare, we do have a reverse head and shoulders, I would say. A little bit messy here for the right shoulder and a little messy here for the left. So it's a little more of a complex one, in my opinion. I don't know if you agree there, Dad. Feel free to disagree. The RSI is
fine. Yeah.
Yep. So reverse head and shoulders is a bullish pattern. So we should expect a breakout. You can see the confirmation line would run right through here. So if this is going to resolve to the upside, we do want to see it get above that confirmation line. Once it does, the height of this pattern added to that confirmation line gives us our upside, minimum upside target, which would certainly put us up here to test those April highs, if not move past that. Healthcare still is looking positive here. It's just kind of gotten in this kind of messy, I wouldn't even call it a trading range. It's just kind of messy. The PMO did tip upward above the zero line, so that is positive for XLV. And participation is okay, but you can see with the SCI, it is starting to roll over just a little bit. And I would like to see more than what we're just seeing here as far as participation. Stochastics have turned up, they're back in positive territory. So overall, I mean, I think healthcare looks all right. The defensive sectors are okay, but certainly those aggressive sectors are starting to show some excellent participation here. All right, Q&A box, how has that been going? We're gonna do our simple requests, but I wanted to give my dad a chance to answer any questions that may have come in besides those. Here we go. Ken asks, can we tell if this is a bear market rally or a run back to all-time highs? You know, how do we know what that would be?
Well, we don't know. No, we don't know. Technical analysis, as I always say, is a windsock, not a crystal ball. And it gives you hints about which way things ought to go. Right now, we've got long-term sell signals on the monthly charts and the weekly charts. And so we are assuming that any rallies are going to be short-lived. Although, as I showed at the beginning, it can be really wild and woolly. And that would not surprise me if we get that this time.
Okay. I see another question about oil and energy stocks for Carl. Correction for both was fairly pronounced. Do you feel the correction was overdone for both? And there is a follow-up question, so I'll let you go first.
Okay, well, as I said when I reviewed the chart on USO, things ran a little bit too high, and then they had to correct back. And there's just, the stories that you're hearing are just seriously confusing. But
yes,
I mean, logically, I believe that oil's got to go higher. We're just getting into the beginning of this shortage, and I think it's just going to take a long time, and it's going to go a lot higher.
Okay. Next is futures for oil seem to be trending down quite a bit in forward months. Is that a concern or just a normal occurrence?
I don't know the answer to that.
Okay. Yeah, I mean, overall, so my dad and I talked, we had this amazing opportunity to talk about the market for quite some time as I was over there taking care of my mama. And one of the things that a subscriber had written to me, they were very confused because they had seen a talking head on some financial network say that, oil and energy were very overbought, but underowned. And we were both kind of looking at each other thinking, okay, overbought means that there's a lot of people that are in it. So I'm not sure how it would mean that it is under-owned. Now you all can have your own opinions, but personally, I didn't see it, but I have to say that my first thought was that somebody's trying to sell us some stocks.
Right.
Okay, let's see. Next up. Carl, our PE ratio is still pretty high. This is a great opportunity for you to share that chart. If so,
Okay.
would earnings disappointments tend to pull PEs down and accelerate the bear?
Okay. You want to pull it up, or do you?
Yeah, go ahead.
Share?
And I can do it, I guess. Right.
I can. All right.
It's your call.
All right. I'm gonna do it.
Okay. Yeah, this is kind of your specialty.
Seriously. Okay, we've got the PE range chart. Sorry. We've got the all-time high for the market, and it's dropped way back down here. It's about a 20% decline, and it's gotten back into the normal range. The top of the range is where it would be if the PE was at 20. And then the mid-range is PE 15. And this is if there was a PE of 10, which is undervalued. It hasn't been undervalued since 1984. And so that's a long time to be waiting. My expectation, and I can't see the future, but I think we're long overdue to get back into the undervalued range, which is going to put the PE down. The S&P 500 down around 2,000 to get down into that range. So, what was the question again? Did I answer?
I think I moved it. Let me see. It's our PE ratio is still pretty high. If so, would earnings disappointments tend to pull PEs down and accelerate the bear market?
Yes. Let me demonstrate the fundamentals on that. Here's the chart. This is the PE ratio. It should be down here at the green line to be undervalued, at least mid-range at PE of 15. So it's the PE right now is 19 and a half. And as earnings are going to start fail, and they will, there's going to start to be reduced, and it's going to be part of the equation to bring the market down much lower.
So the answer to that question is if earnings disappointments pull it down, and will it accelerate the bull market, is yes.
The bull market or bear market?
Oh, I'm sorry, bear market.
Right. Mm-hmm. Yes, we expect, or I expect the bear market to get down in this area, as I said, around 2,000. That's what I'm, have no special knowledge in this regard, but we're so whacked out fundamentally. Never in my life has it been this bad. So this is all going to have to work itself out, and it's not going to be pretty when it does.
Yeah, I agree. Follow-up question for Carl on oil and gas. Are there specific stocks with higher dividends that are doing better than USO? I know.
I don't follow individual stocks within the sector. What do you think, Erin?
I would say that I'm sure there are. Let's see, one of the ways we can do this, I'll give you a little trick, because I do have a scan that will work for this, where we can at least see what the high yielders might be in that sector. So I'm going to go to my over here. So I have a high yield scan right now. It's set up for energy and real estate. So I'm going to go in and change that. So what we want is only the energy sector. So I'm just going to take real estate out of here. And what I've got it set up for is a yield greater than 5. But if we want to see ones that are better than USO, I will pull up USO and we're going to see what it is. And at this point, the yield is, well, we don't really see one for USO. So let's just keep pressing forward here. I'm going to run the scan. And now this has given me all of the high yields, the ones that are over 5 for the yield. And there are quite a few here. I'm going to go ahead and save it to a chart list. One thing I recommend is setting up a transient, I guess, chart list that anytime you put anything in it, you know that it's not going to be saved. It's just a great place to drop those results for your scans. So I did save it because I want to look at this on Candle Glance. And that way I can get a better feel for what all of these are doing. Because clearly when you look at these, some look much more bullish than others. But I have to say, looking at this overall, a lot of these look pretty healthy here. This one has a flag and we're getting a little bit of a breakout, but we haven't broken above resistance. This looks great with that breakout. Let's see, what other ones are catching my eye? I don't like Magellan Midstream. You can see that it popped, but now it's dropped below the 50.
How about the yield on those? What is it? Can you make that a list?
Let's see. I don't think that I can actually do it as an indicator. No, I can't do it as an indicator, but okay. So this is the PMO rank as we go through here. I do see some real estate ones still in here, which I didn't plan on seeing. So let's just look at a few of these. So Magellan Midstream, for example, we have a yield of 8.49%. We see pretty much a double bottom that's formed here. And we did get price above the 50, but currently it's back down below the 50. Certainly we can see some improvement on these charts, but I have to say, if I'm going to be in that group, the relative
8.5% dividend or yield, I should say, 8.5%. And that's a pipeline. So the pipelines are really good. They give really good dividends. The only hitch for those is you're going to have to file a K1 with your income tax.
Yep. Limited partnerships. And we have a couple of others. Yeah, pretty much all of those.
Right.
Dorian is not a pipeline. Oh my goodness, that can't be right. 22% yield. I'm ready to go buy it.
Okay, let me write that one down.
I know. This is LPG. We can see another double bottom that's formed here. We don't quite have the breakout. We do see the RSIs in positive territory. We do see a PMO that is about to give us a positive crossover. And look at the outperformance here as well. I think we found a good one, Dad. This has, while the group is trending lower and not performing quite as well, this one has been really good against its industry group. So just a review, this tells me how the industry group is doing against the SPY. This tells me what the sector is doing against the SPY. And this one tells me what that symbol is doing against its group. So this is a way right here, this bottom pane, to make sure that when you are fishing within a group, that you're finding the ones that have the relative strength against the group that is rising. So you know you've got leadership as far as the stocks that you're involved in. But yeah, this is a really nice looking chart, actually.
Yeah. Not a recommendation, just deserves a closer look. And
yes.
Why don't we do some symbol requests, Erin?
Yeah, absolutely. I just wanted to, there was one other here. That's a Canadian stock that also has a high yield, 5.56%. A little bit parabolic here, but I like the breakout. And you can see the PMO's already given us that crossover buy. So looking good there. All right, let's dive in through some of these symbols. We certainly have a lot. Paul mentions that there are 3 that he knows that have high dividends in the energy area, which is CVX, DVN, Devon, PXD. So you can go ahead and take a peek at those if you decide you are interested. All right. Thomas asked about apps, APPS, but then he said, do the Biotechs still look good? So I'm going to go into XBI. And Dad, I'll let you look in that Q&A and you can throw me some of those symbols as we go along. All right, double bottom that did execute and did recently hit its minimum upside target pretty much right at this level of 85. So it's pretty close. You know, it did get above this area of resistance at these lows, but it is struggling to get much higher than where it's at as far as the Biotechs. RSI still looks pretty good, but the PMO is starting to look a little toppy, and stochastics have topped and are now back below 80. Outperformance still looks pretty good, but you can see it's starting to sag a little bit here. So this one, I would say, you know, while it still looks bullish, if you were to own this, I mean, personally, I think I would still be holding it a little longer just to see if it's going to get above 85. But if it can't do that and it gets below 80, I'd probably be ready to get rid of it. But I know we've been talking Biotechs quite a bit on diamonds. We talked about them at least 3 to 4 weeks ago. So we did get in on some of this rally that we did see.
It's a double bottom that we had there, bullish formation, and it's pretty much reached the minimum upside objective for that double bottom.
Yeah.
But could be a lot more to go on it. So
yes, that's why I would be, I think I'd still hold on to this one. It is helpful. Oh my gosh. It is helpful that when you put your symbol request in, if you want to say you're looking to sell, you want to know if you want to hold, or if you're thinking about making it a long or at least a buy, just mention that. And then that way we can kind of tailor what you're looking at or want to see.
okay, how about ATGE?
Okay, I promised apps, and then I'm going to do that. And then I'll do that one next. Software company, software performing meh. And this one is performing kind of not great. I mean, it's certainly not underperforming, but really when you're talking about the SPY being in a bear market, you want to see a lot of outperformance because it could just be that it's moving down slower than the S&P. Certainly having a great day today.
It's up about 30%, it looks like, and it is a double bottom.
Yep.
You know, so yeah, there could be more going on that.
Yeah, absolutely. Certainly more upside available. This is the confirmation line right here. And if we get above that, we would expect a move about the height of this pattern, which would probably give us a move right up to this area of overhead resistance. That would be a gain of about 15%. So there is certainly some upside potential. Stochastics turning up. Love the way the PMO is bottoming above the signal line, but be aware it is below the zero line. All right, what's next?
ATGE.
Got it. This is in consumer discretionary and special consumer services. This was an area that I was looking at as the industry group to watch. I would point you to our blog on our website. You'll see the free article on the blogs and links page. You don't have to be a member to see our blogs and links page, and there is free material listed on that page. Nice breakout, I would have to say today, like that, RSI positive. My annotation tool thing is not working. There we go. PMO rising kind of at the top of its range right now, but yeah, I like stochastic staying above 80 and really nice outperformance here against the S&P and against its group, which is already outperforming. So this is an area, one of the industry groups I like. Now, I haven't looked at the 5-minute candles here at all on these. I'm going to pull it up for ATG. talk a little bit about what you're seeing here. So this is a 5-minute candlestick with the 5-minute RSI, 5-minute PMO, and 5-minute on-balance volume. I pay more attention to the RSI and PMO. This is where we determine when we enter and when we exit. And we use the PMO and RSI hand in hand to help us determine that. Let's see if I can get my spec tool working again. Excellent. So the conservative buy point, or the mechanical buy point, if you will, is when the 5-minute PMO has a crossover and the RSI is positive. So our last buy point came in on Friday, right about here. So the question would be, well, I'm sitting here looking at this stock now, what do I do? Well, if you're still seeing the PMO rising and you're still seeing the RSI rising, you could certainly make that entry. RSI getting overbought, though, is kind of a warning sign, so I would be careful with that. You can see that the sell point was when the PMO turned over, and that's my mechanical sell point. The minute the 5-minute PMO turns over, that's when I want to be out. That would have gotten me out over here. So if I'd gotten in on that conservative buy point, I would have gotten in here, and on the sell point right over here, I would have gotten at least a 1.5%, 1.4%. So that's just a nice little, inside that you can get, even though a stock, maybe it'll even close lower. But if you time these entries and exits properly. Now, of course, you can also use chart patterns to help you. You can also do things a little more aggressively. You could wait till just the PMO turns up and get in. That's basically our 5-minute candlestick trading rules of entries and exits. So go ahead.
Andrew wants to know about a long-term hold on the QQQ. And without looking at a chart, I'd say no.
Well, one of the
what's long-term?
Yeah, one of the bear market rules is that we don't think of any investment right now as a long. Everything should be managed in the very short term. All right, let me get QQQ here. Yeah, StockCharts is not refreshing quite as quickly as it normally does. There we go. Yeah, it's looking a lot like the SPY, obviously, in this sort of trading range. Could possibly be forming a triple top, as we were talking. I mean, the chart looks pretty healthy for the moment. Personally, I would want to see a breakout. I would want to break out above this area of overhead resistance, the confirmation line of this double bottom formation. It's kind of a not quite textbook double bottom, just because it's coming off of a rally. And these typically are reversal patterns, but you could still look at them this way as well. And so to me, that's why I would need that confirmation line and the 50-day EMA overcome.
Okay, how about Amazon long?
Okay. Quickly though, the 5-minute chart for the QQQ. We gotta get a little bit in here because this is the trading room. The buy point was first thing this morning, basically. The sell point came in shortly thereafter. Doesn't look like we're going to get a buy point today. You could see where you could have maybe entered here on the PMO turning up, but that's why I do like it personally for the PMO crossover on the 5-minute before I make the entry. So we'll be waiting for an entry by waiting for that PMO to turn up, RSI to be positive. That's where I would be considering my entry. All right, next one.
AMZN.
AMZN. Amazon, yes. 5-minute chart on the right. All right. Well, I can tell you looking at the 5-minute, it's sell point, just right off the bat. So this is another setup where you have kind of that double bottom-ish look. But honestly, when I look at this, I don't know if you agree, Dad, but so we can see that rising bottoms and flat top. That is an ascending triangle. This suggests we will get that upside breakout. But this is going to be tough to get above this level. It's got the 50-day EMA to also leapfrog there. And while I do like consumer discretionary, I'd be really careful here. I would need for me for entry, again, I am more of a momentum trader. I like to wait for my confirmations. And while we're getting that PMO turning above the signal line, me personally, I like to wait for the breakout. We don't have the breakout quite yet, but I don't see anything that negative on this chart that would say you have to wait for the breakout.
Look at 1 year chart. 1 year chart.
Yes. The 1 year chart for this one. There we go.
Right. And it's how far down I don't have it right at the top of my memory.
Yes.
It's down about 30%
from the March top?
From the November top, all-time high.
Yep.
In November.
Currently. Yes.
No, it's come down almost 40%. You know, it's bouncing along right now, but it's still in a bear market big time.
Exactly. Another reason why I would want to wait probably for that breakout, but honestly, upside potential is somewhat limited because this is where you're going to hit a resistance zone at this gap resistance, at this top, at these lows. So that's, if it can get up there, that could be a 14% gain. I would be more apt to see it come right about here, which would be about 10.5%. I think it's going to get held up at this resistance zone, just too much for it to deal with. But I think right now, in the very short term, it doesn't look too bad. No buy point. The PMO is on a sell signal now. The prior buy point was right in this area at about 115. So that is where I would be looking at for a possible entry if you wanted to get in. But definitely, if it gets to that level, make sure that that PMO is turning up. If you get into anything with a PMO turning down, your odds of success diminish a lot, as far as we've noticed.
I'm going to have to duck out here. I'm sorry.
Okay. No worries. I will continue. We have looked at QQQ, semiconductors. I think that's a great place to go next. A lot of talk about the bill that's getting through Congress. They're talking about helping the semiconductors with, I think, $56 billion to improve the output and the overall functionality and progress. And you can see, boy, they certainly aren't interested in the fact that that's happening right now. SOX is actually a 3 times share to the downside. So actually, let's just look at the SOX. So you can see we've got this reverse head and shoulders looking fairly good here, PMO buy signal. And really, you know, at this point, my concern is, again, another resistance zone. You've got gap resistance right in there. You have these lows, this top, and we're not there yet. It's also a filled black candlestick right now. And that tells you that the bears are starting to win out. So, you know, there is potential here just because there is politically, you know, things going on under the surface, if you will. I'm more interested in the straight up technicals on the chart, and the technicals are looking very bullish. But as I said, for me, I like to get that confirmation, and we don't have it. It hasn't moved above that 50-day EMA quite yet. Buy points, well, came in at the end or the beginning. Looks like it was about the beginning of today on that pop to the upside. And after that, we got that failure, moved back down, but it didn't quite cover this gap. So that was a good sign to see it bounce off of that level. And right here, you had a PMO bottom above the signal line, and it's already on a buy signal because it's above its signal line. So that would have been a pretty nice entry right in this area. So this is going to be the area you're going to watch for an entry. But again, I want to make sure that that PMO is at least turning back up, because that tells you there's positive momentum still in there, and that gives you that better entry possibility. We have about 9 minutes. I'm not sure if Carl will be back, but As I said, my mom is ill right now, fresh from the hospital. And so unfortunately with my respiratory, I was able to be there until Saturday, and then I had to dip out. So he has to make his way back to take care of her, unfortunately. Hoping he'll keep his strength up and doesn't get sick either. So rising bottoms, looking at kind of a flat top here. I do see possible double bottom formation here on CDNS. Let me get my own. There we go. The 1 year chart's great, but I really like to be able to see these candlesticks. So I'm switching back over. But as Carl showed with Amazon, it's a lot of times you need that longer term chart just to be able to get a feel for those support and resistance levels. So what do we got here? PMO bottom above the signal line, which I like. RSI has been positive for quite some time, despite it not making, huge gains here. Stochastics is turned up in positive territory. The group is doing so-so, but you can see that this one has tended to be quite the outperformer of its group. So if you're gonna be in a stock in this group, this might be a pretty good choice here. You can see those rising OBV bottoms that are confirming this move to the upside. Again, the problem we're having here is resistance zones. And there's quite a big resistance zone here. At this point, for me, I know it sounds like, well, would you ever buy a stock? Yes, I do buy stocks, but I really have to have confirmation a lot of times. And that's just through experience, having been in and out of the market and getting burned, to be honest, when I don't get those confirmations and I get back in. And that's the point you could also make, is that you can get back in when you get back out of stocks. So think about that. Double bottom, kind of messy. We need to get the price above this confirmation line. I'd say if we can get above 165, we're probably going to see some nice follow through. I would just, this group is just kind of performing ho-hum. That's probably my one beef, if you will, with this stock. But overall, I mean, you still have the rising bottoms. You have a bullish double bottom forming here. I think that you could make a case to get in. But as I said, for myself, I'd really want to see it hold above 160 longer than 2 days, like we saw back here. Another day of upside would give us a follow through day. That would also give me a better sense of whether we're going to see that breakout to the upside. But if you want to be in software, it looks like this is one of those stocks that you would want to be in. Looks like all of the stocks are starting to pull back right now. I imagine the market must be as well. The buy point came in on Friday when the PMO went positive and the RSI was positive. That would have gotten you in pretty much at the end of the day, it appears. Yeah. But now we're getting this move down to the downside, PMO looking pretty sickly, RSI now negative. I don't really see certainly a conservative buy point arriving today, but I could see a more aggressive one if the PMO were to turn up, if we can hold some sort of rising trend. But honestly, if you look at this, the rising trend has been busted already. All right, next up, we have 5 more minutes. So I want to try and cover a couple of these. I'm going to skip around because we do have so many here. Let's look at Royal Gold, I'm sorry. All right, and as you can see, looks like the 20-day EMA has been holding strongly. Honestly, when we look at gold miners, I'm just going to pull up the gold miners chart that we have, because I don't like gold miners pretty much at all right now. We don't have a heartbeat. And I'll show you what I mean. So you remember the sector charts, we have all the under the hood indicators. Gold miners is one of the few industry groups that we also are able to calculate those under the hood indicators. And as you can see, with gold failing, gold miners have really been hit hard. And in this case, I'm going to give us a little bit more time frame here on the chart. And you can see we're looking at 1.5 years, and it's hitting lows that it has not seen since then. We'll give you a quick weekly peek, and then we're going to go down below the surface. So this is where the strength does lie. And it does appear to be bouncing off of this strength, the gold miners in general. But you could see PMO is still not looking good. I do like seeing that the RSI is starting to turn up from oversold territory. But the point is that these guys have been completely beat down. And because of that, there's just no participation under the surface. None. We have no stocks above their 20, 50, and 200-day EMAs. I wouldn't touch gold miners right now with a 10-foot pole, not until I at least see this declining trend fade away, because it's a pretty strong downtrend. Let me get this solid so it's really obvious. So, I mean, you can see even if we drop it down here, I'm going to try and get this up here a little bit. You can see we're not even that close to the breakout. We kept trying to break out and we just never got it. I need to see a breakout from this declining trend. And I really need to see just a heartbeat of some sort. And we just don't have it. Stochastic's turning up, but we've seen that twice before and gotten failure. So be careful with that. All right, we have 2 more minutes. And what would be my choice here? A lot of people talking about SMH. I think that's the semis though, right? Yeah, we talked semis quite a bit. This does look pretty good though, I have to say, for semis, and knowing that they will get a lift possibly from what's going on politically is pretty interesting as well. We talked oil. Let's look at Carnival. I know that they have been kind of heating up the board of most active and most the biggest market movers. Certainly they are today, forming kind of a Adam and Eve double bottom here. I'll let you figure out why they call it that. And let's get the 5-minute on here. This is going to be the last one, and then we are going to have to close the room. You can see that the double bottom is not quite confirmed yet, but I love this breakout above the 20-day EMA. We have not seen that since this decline began. And as I said, we're seeing discretionary looking really good as a sector overall. This sector is still struggling just a little bit, but you can see that this one is starting to improve. Entries, no entries today. Entry was at the beginning of the day. Unfortunately, this is something you will often see, is that gap up on the open is going to be that first buy point. And then we have to just, wait it out and see how that RSI, which gets overbought right away, is going to react. But you can look at where the last buy point was and then start thinking about it that way. All right. I'm going to let you know one more time about our bear market special. Right now, it's only until Friday. If you want to get our bundle for $14 on your first month, there you go. It's normally $68. Just use the coupon code BEARS, but you must subscribe to the bundle. If you decide to cancel anytime during that period, you will still get your full month. If you decide you don't want both of our products, send us an email at support@decisionpoint.com, and we will make sure to get you on board the report that you actually want to continue at that point. All right, that's all we have today for the trading room. And I want to wish you good luck and good training from Carl and I. And hopefully we will see you next Monday. Thanks so much.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.